PD arrays tell you everything. Why is this? Because first of all, they tell you the trend. So they tell you if we are bullish, bearish, or consolidating. On top of that, they also tell you when we are going from bullish to bearish or from bearish to bullish. So when there's a reversal. On top of that, they also tell you when we are transitioning from a normal bullish or bearish trend into a consolidation. And that's very useful because if those market conditions actually change, that will tell you when you should stay out of the market so you can avoid potential losses. And they tell you when market conditions are good again, so you can get involved again with the market and you can take more winning trades. Now, next to that, they also tell you the daily bias, the next target. Next to that, they also tell you the context area, so where to actually take a trade, which is very useful for where you should be taking an entry. Now, PD arrays also tell you which entry you should be taking and what the entry confirmation actually should look like. Next to that, they also tell you the risk management. So for example, when you should be going break even. I would argue that this is everything you need in trading. And this is also everything that you are going to learn in this video. You could argue that this is going to be a PD arrays masterclass, which in itself is going to be a strategy. Now, to fully understand everything, we need to start at the start, obviously. We start off with PD arrays. I need you to understand everything that we are going to dive into in this video applies to all the PD arrays that you can imagine. But for this video, we are going to mainly focus on the following 3 PD arrays. So if you're new around here, then I'm quickly going to introduce you to the PD arrays that we are going to be using throughout this video as well. Now, the first type of PD array that we have are the swing points. So for example, right here, we have that 3 candle pattern with that wick sticking out at the bottom right there. That's what we call a swing low. Then on top of that, we also have when a wick is sticking out with a 3 candle pattern at the top right there, this is what we call a swing high. So we have the swing high and swing low, which as a group we call the swing points, oftentimes also referred to as liquidity. Now, the second type of PD array that we are going to be focusing on throughout this video is the fair value gaps, of course. So the gray boxes that you see, for example, right there, those are the fair value gaps right there. Now, number 3 that we are going to focus on as well is what we call the order block. So whenever there's a retracement in, for example, a bullish trend, the down candles that we see right there, they leave behind that order block. These are the 3 PD arrays that we are going to focus on. But to fully understand what we are going to talk about and to, well, be on a straight line with each other, it's very important to understand how we actually refer to these PD arrays as well, or what does PD array even stand for? So we move on right here. We have those same PD arrays that we just talked about, right? We have the swing points on the left, we have the fair value gaps in the middle, and the third one is that order block right there. Now, when we refer to a swing high right there, it's basically a bearish PD array. We refer to a bearish PD array as a premium array. When we refer to a swing low right there, we are essentially referring to a discount array. So when we are trading into, for example, that swing low at the bottom, then price is offering a short-term discount to the market to then continue higher afterwards again, potentially. Now, when we are trading into that swing high, price is doing the opposite. So offering a short-term premium right there where price can potentially continue lower afterwards. So a swing high is a premium array. A swing low is a discount array. Now, when we refer to the fair value gaps right there, the bullish variant of any PD array is always a discount array. So a bullish fair value gap is a discount array. A bearish variant of the PD arrays is always referred to as a premium array. So a bearish fair value gap is a premium array. Now, in this third example on the right, we see that we have a bullish order block because we are moving higher. So if it's a bullish order block, we refer to it as a discount array. If it was a bearish order block, we would refer to it as a premium array. So this is what we refer to as PD arrays. Now, this is quite important to note down at least because we're going to dive into specific sequences of discount and premium arrays where you should be aware what we are referring to, if that makes sense. So moving on right here, what can PD arrays do? So when we trade back into a swing high, swing low, those fair value gaps or order blocks, what can happen? What can they do? What are they capable of? 2 things. Very simple. There's 2 possibilities at every PD array. First of all, we can respect it. Now, when we respect a certain PD array, for example, we have this swing low sitting right there. If we trade into that swing low right there and we respect it, then we move away from it. Again, that means that we are respecting it. That's the first option, the first possibility of what every PD array can do. Then the second possibility is disrespect. So we, at every single moment in time, we can either respect or disrespect a PD array. It's as simple as that. So disrespecting a PDA, if we have the same exact sequence, we also have this swing low right there at the bottom. Now we are not respecting it, but instead we are disrespecting it. So what that means is we are not rejecting away from it, but instead we are continuing lower and we keep trading through that level. I'm going to provide you with more examples as well. But first of all, again, important to understand. So respect versus disrespect. Again, when we are respecting a PDA, we are rejecting and moving away from it. It's important to understand. So you have a level, we are rejecting away from that level. Now, when we are disrespecting a PDA, we do the following. We have that same level, but we keep trading through that level. So we are not rejecting away from it. So to fully understand this, let's go over a couple of examples. But before we do that, it's also important to understand. When we are respecting a PDA, again, it's not like we trade back into it and we're just waiting forever until hopefully one time it rejects and moves away, if that makes sense. No, there's a specific time. So either it's going to be the first candle right here that rejects away from the PDA. For example, right here, we see the first candle is a slight rejection. The second candle actually creates that move away, if that makes sense. If it's not the first candle, it's a second candle right there. So if we have this bullish fair value gap right there, that PDA, that discount rate, the first candle, as you see, is not a rejection. So we can actually sweep that low right there, that first candle's low, to then continue higher again. That's also oftentimes what happens. So it's either the first or the second candle. And it oftentimes is seen on the same time frame as the PDA itself. Now, if we now dive into a couple of examples to, again, make this a little bit easier. Then first, let's go over this respect example right here. Again, we are focusing on this swing high right there. So whenever we trade into, for example, a swing high or a PDA, we don't know for certain what will happen. We can, again, respect it or we can disrespect it. So the first candle is not always going to be clear. That's where we need the second candle to tell us what is actually happening at this moment in time. So for example, we see that the second candle right here is a very large down candle, is rejecting away from that level, from that swing high. That means that we are respecting it right there, continuing lower. On the contrary, if we are disrespecting it and we have that same swing high right there, again, with that candle, we can't get early conclusions, as in we can't draw early conclusions from that. We don't know for certain what will happen. We can still respect it right there. But if we're disrespecting that swing high right there, we are, instead of rejecting away from it, we are actually continuing higher and we are disrespecting it right there. Now, as you might know it, this is also referred to as, for example, the respect right there is what you would call a sweep of liquidity. The disrespect right there is where we are often running the liquidity. So we are continuing higher instead. Next, we have the fair value gap. So if we are respecting, and in this case, a bullish fair value gap, then what does that look like? Well, we already saw a previous example. When we trade back into that right there, we are trading back into that bullish fair value gap and we are rejecting away from that bullish fair value gap again right there. So bullish fair value gap, we're trading back into it and we continue higher again from it. Now, next to that, we also have disrespect right there. So when we are disrespecting a bullish fair value gap, that looks something like this. We are trading back into it. Again, with that first candle, we can't really accurately say what we are about to do, if that makes sense. So we need some more development of price action. Now, what we see in the next candle right here is that instead of continuing higher, so instead of rejecting away from it, we are disrespecting that level. So we are continuing lower instead. With the next example, if we quickly go over the bearish fair value gap right here, when we are respecting a bearish fair value gap right here, again, we are trading back into it right there and we are rejecting away from it. That means we are respecting a bearish fair value gap. Disrespecting a bearish fair value gap, same scenario right here, but instead of rejecting away from it, we trade back into it and we continue higher instead right there. The last example we have is, of course, of the order block. So when we are respecting an order block, that looks something like this. Again, we have the bullish order block right here, that discount rate. When we trade back into that level right there, we then continue higher from it again. When we are disrespecting a bullish order block, that looks something like this. Same scenario right there. Instead of rejecting away from it, we are completely disrespecting it and we are essentially completely blowing through that level. Okay, so why are we talking about this? Why is this even important? Why PDAs? What's the point of this? Well, because price is always moving towards a PDA. It is our job as traders to find out which one is next. And by understanding if we are respecting or disrespecting a PD rate, we can then understand which PD rate we are moving towards next, which we're about to dive into. So if we take a look at the chart, we are currently looking at NASDAQ. Now, the first thing that we should be doing is just mark out the PD rates that we went over. So for example, right here, we see this bearish fair value gap right there. We also actually have this order block right there, bearish order block right there towards the left. If we take a look at this right here, we see that we have a bullish fair value gap right there. These are all the closest PD rates that we have on the 4-hour time frame at this moment in time that are close to current price action, that are close to the current price that we are trading at. So what we want to do is simply observe what happens when we trade back into those PD rates. So for example, right here, we see right here that we are now trading into this bullish fair value gap right there. Okay, first candle, could argue that it is rejecting away from it right there. We also create a second candle that is also rejecting away from it. You could actually make the argument that we are respecting at this moment in time this bullish fair value gap because we are rejecting away from it. But important again, whilst price action is developing right here, we also see that we are now creating a swing low right there. Of course, important to understand because if we trade back into this swing low, we want to monitor again, what are we doing? Are we respecting or are we disrespecting that swing low? So in the next candle right here, we see that we are trading back into this swing low right there, and we're actually respecting the swing low. So previously we were respecting the fair value gap. At the same time, we are also respecting this swing low right there. Those are pretty good signs that we are respecting the discount arrays right there. Okay, that's all we need to know for now. Now, what we see with the next candle is that we are rejecting away from those discount arrays even further. This is, again, notice what we are moving towards. Price is always moving towards PD rates. It's our job to find out which one is next. We're using respect and disrespect to find out which one is next. All things we're going to dive into in just a second. What we see right here is that we are now trading back into the bearish fair value gap and the bearish order block right there, those premium rates. Are we respecting them or are we disrespecting them? Well, the first candle is, I would argue, more so a rejection away from it than disrespecting it. The second candle will clear that up even more because here we see we are simply respecting those premium rates. That means we can now potentially move lower again right there. Again, what do we have? Well, we now have this swing low created as well. We also have these swing highs created right there. And if we let price action develop a little bit further right here, what do we have? What do we see? We also see that we now have this swing high created right there. On top of that, we also now create these bearish fair value gaps right here. So if we take a look at this price action, then what is happening right now? Well, we have this bearish fair value gap that we are trading back into. And we see that we are clearly respecting it. So we trade back into the bearish fair value gap and we reject away from it again to continue lower again. So here, now the next target is arguably this swing low right there. We have this swing low right there. We are not really rejecting away from it at that moment in time because we create another down candle as the second candle. So we see right here that we have this bearish value gap that we are respecting, that we are rejecting away from it at this moment in time. So we could argue that we are respecting the premium rate and we might be disrespecting that swing low right there to instead continue lower in the short term right here. So we went over the respect versus disrespect. Now, why is this all important to understand? What is this leading up towards? Okay, again, what can PD rates do right here? Now, what I want you to pay attention to and what we just saw in the chart as well is the following. When we, for example, have this swing low right here, and we're actually respecting that swing low, then what you will see is the moment we respect a discount array, we will move towards the next premium array right there. Now, if we have this bearish fair value gap right there, at this moment in time, it's not too clear what we are doing right there. If we are disrespecting that premium rate, that bearish fair value gap right there, then we could make the argument we are moving towards that next swing high that we see at the top right there. But if we are respecting that bearish fair value gap right there, that premium rate, that could mean that we are moving towards this next swing low that we have right there. So what we see instead right here is that we are disrespecting the bearish fair value gap. So that means we are moving higher towards that swing high. Now, this is a cycle that keeps repeating. Now we are trading back into that swing high right there. If we are respecting that swing high, we could now actually trade lower towards that next swing low right there. What is this cycle? What am I talking about? What is actually repeating? Okay, what is important to understand is the following right here. And please note this down because, again, this might initially be quite a lot of information to take in, but we're going to talk about it over and over and over that it will, by the end of this video, will absolutely be clear. So what is this thing I'm talking about? Okay, when we respect, so when we trade back into a discount array, that's those bullish variants. So that's a swing low, that's a bullish fair value gap, that's a bullish order block. When we respect a discount array, what we can expect next is that we move towards a premium array. So this is, for example, what we saw in this price action. If we go back a little bit right here, we see at this moment in time that we are respecting the bullish fair value gap and we are respecting that swing low right there. Because we are respecting discount arrays, it's very likely that the next move is going to be towards a premium array. So when we trade into a discount array, there's two things that can happen. We are either respecting it or we are disrespecting it. So what we see, for example, right here is the second option. Now, what is the second option? The second option is disrespecting. So when we disrespect a discount array, what can we expect next from price? Well, when we disrespect a discount array, it's very likely that price will now move towards the next discount array. So we actually see this a little bit earlier in this price action right here as well, because if we go back right there, and what we talked about initially is we have this swing low right there. That swing low, we actually trade back into it. This moment in time is not so clear what we are doing. We also have this next discount array. So swing low, discount array, and we have a lower discount array in terms of this fair value gap right there. Now what we see is that we are disrespecting this discount array, that swing low, that allows us to move right now to the next discount rate. Then this is the next likely target that we have right there. And if we respect that discount rate, like we discussed right there, then we can likely move towards the premium arrays that we have right here. But if we disrespect this discount array, again, then we can potentially move towards the next discount array that we have right there. So the question all starts with, are we respecting or disrespecting that PD array? If we are respecting these discount arrays right there, that means that we are moving towards a next premium array right there. But if we were to disrespect, like for example, this swing low, like we saw, if we are disrespecting that discount array, we are moving lower towards the next discount array. Again, this is going to return because this is going to be a huge theme throughout this video. Now, next, of course, we also have premium arrays, right? Again, what can we do with a premium array? Just like a discount array, we can either respect it or we can disrespect it. To think along and to really try to understand this, what could help is try to already fill in right here what the answers would be. So for example, if we are respecting a premium array, what is the next likely move? Well, if we are respecting a premium array, the next likely move is towards a discount array. So like we see, for example, in this, again, this price action right here, we are respecting those premium arrays right there. So what is the next likely move? We continue lower, we continue lower, we continue lower, because eventually these discount arrays right there, they become the target. Just like we see when this premium array gets created right there, the bearish value gap, we respect it. We are now moving towards discount arrays right there. Once we reach the discount array, again, we reevaluate. Then the next one is, again, if we disrespect a premium array, then what are we doing? Well, if we disrespect a premium array, it's very likely that the next move is towards a premium array, the next premium array. So respecting a premium array leads to us reaching into a next discount array. But if we, for example, go down a time frame into the 1 hour right here, then we'll see the moment we actually start disrespecting, for example, these swing highs right there, that was the moment we then reach for the next premium array, the next swing high. If we keep disrespecting that, we then reach for the next premium array. If we disrespect this premium array, we then reach for the next premium arrays right there. This premium array is eventually the one we actually respect. Once we respect that, we can now start moving lower towards discount arrays. Again, take notes, but this is something we are going to return to, don't worry. So what is important to understand is that a disrespected PD array tells you just as much as a respected one. But most traders are obsessed with needing it to be respected. So whenever you, for example, learn about fair value gaps, most of the time you only learn about, okay, well, this fair value gap, we can potentially trade into the fair value gap, we can respect it, and we can continue higher, for example. Those fair value gaps, they don't have to be respected. So oftentimes when they're not respected, then traders are like, well, what am I supposed to do now? But a disrespected fair value gap tells you just as much as a respected one. So what we've just done is we've just built the foundation of everything that we're going to talk about in this video. So right here, what we're now going to move on to is number 2, the trends, which is a very interesting topic in my opinion. Because when we talk about the trends, again, now we can really understand what a bullish trend, for example, is. We can objectively understand what a bullish trend is when we are moving higher. So what is a bullish trend? Well, a bullish trend, quite frankly, is disrespected premium arrays and respected discount rates. So what does that look like? For example, right here, again, we have this price action right there. Now, at this moment in time, we have this bearish fair value gap. That's a premium array, right? It's a bearish version of a PD array. Then we also have that swing high right there, also a premium array. If we trade higher right here and we are disrespecting those premium arrays, that's a very good sign that we are moving higher and that we are bullish at that moment in time because we are disrespecting the premium arrays. Now, on top of that, if we now retrace back into, for example, a bullish fair value gap right there, on top of that, we also actually have the bullish order block right here towards the left. At this moment in time, we are now disrespecting premium arrays and we are respecting discount arrays. So what can we expect for future price action? Well, for the future price action right here, we can expect that we are more bullish than bearish at this moment in time, unless that switches around. But for now, we are more bullish than bearish. So what we want to do is we want to start looking for buys. And again, if we go further right here, we see, okay, we do create this aggressive retracement right here. We have this swing low that we can trade into. We see at this moment in time that we trade back into it, not entirely clear what we can do right here. We also have this bearish fair value gap right there. Now we see that we are trading back into the bearish fair value gap and into the swing low right there. This is a battle right here between two PD arrays, between a premium array and between a discount array. Whichever one is going to be disrespected is quite crucial for us to understand. Because if we now see that the bearish fair value gap, the premium array right here, is actually disrespected, again, the bullish trend is still good, is still going strong. So here, this is very interesting right now to still continue higher towards the next swing high that we have. That swing high is also being disrespected right there. So we can just keep continuing higher. This is a bullish trend. This is, for example, what we are seeing on Nasdaq at this exact moment in time. Well, whilst I'm recording this video, this might be a little bit later when you are watching this video. But here we see, for example, initially we actually see these bearish fair value gaps right there. They are getting respected to potentially continue lower. And we could argue that we are disrespecting these swing lows right there. Until we reach this swing low right there, we are respecting this swing low. Then we start trading higher and we actually start disrespecting this bearish fair value gap, disrespecting this bearish order block right there. We start disrespecting this swing high. We start respecting the bullish fair value gap that we have right here at the bottom as well. And we keep continuing higher right here. Now we keep disrespecting right here those premium arrays to continue higher. Then right here, we also have this premium array right there that we are currently trading into. And I would argue that we are disrespecting that. So it's very likely that we are sooner or later going to reach those highs right there. This is then how we can objectively understand what the trend is doing. Now, what if you invert this? So when we're talking about a bearish trend, when we are going lower instead, again, if we objectify the bearish trend, then that all starts with respected premium arrays and disrespected discount arrays. So what that looks like is if we continue higher, first of all, right here, then what you'll see is we might create a bullish fair value gap at that moment in time. Now, at this moment in time, it's not entirely clear what we can do. At the same moment right here, we also start creating a swing high right there. Okay, well, initially we might actually be respecting this bullish fair value gap right there. Now we also have this swing low at the bottom right there. Again, this is like we talked about a little bit earlier. This is quite a crucial moment in price action because this is like a battle between the premium and discount arrays. So for example, right here, we see with the next candle that we are continuing lower, respecting the swing high right there, respecting a premium array. We are instead continuing lower, trading through that bullish fair value gap that we had right there and trading through the swing low right there, potentially disrespecting those. So disrespecting the discount arrays. If we now keep continuing lower right here, we have disrespected the discount arrays and we are respecting the premium arrays. Now, if we keep continuing lower, eventually we create this bearish fair value gap right there. If we trade back into that bearish fair value gap, we can potentially now reach this swing low right there, but only if we respect it. So what we see right here is we respect this premium array, bearish fair value gap. At the same moment in time, we also have this weird sting below the swing low, not too clear. So if we now start to disrespect, again, either the premium array or the discount array, that will clear up what we want to do. So here, for example, we continue lower, disrespecting the discount array right there. So the trend is what we see right here is just very bearish. Here at the bottom, we create a swing low and we also create a swing high right there. Okay, now if we trade back into that swing high right there, we can assume, well, this is potentially to continue lower again, to respect it and continue lower towards the next swing low right there as well. Ultimately, this is then what creates a bearish trend. So for example, we now have this bearish fair value gap right there. we also have this swing low that we are disrespecting right there. So we have already disrespected this swing low. If we now trade back into this bearish fair value gap right there, what can we do? Can we respect it? Well, we are respecting it at that moment in time. So we can potentially move towards the next few swing lows that we have right there. If we keep disrespecting those swing lows, then we can assume at that moment in time, again, we are bearish. Now, there will be moments right here where, for example, you have this bearish fair value gap right there. And we could actually make the argument that we are disrespecting that bearish fair value gap at that moment in time. This is where there's a potential reversal right here. So now we have this bullish fair value gap that we might be respecting right here. When we create this bullish fair value gap right there that we are respecting, it is really a question if we can keep that up. So if we can now keep disrespecting the premium raise right there, keep respecting new discount raise, then we have a potential reversal. But as long as we are not doing that right here, then what are we looking at? Well, if we now trade above this swing high again, right there, then we see we are respecting this swing high and we again start disrespecting those discount raise right there. So we continue the bearish trend right there. We are price action essentially recovered itself right there to continue bearish. So you'll notice that this price action right here adds on perfectly to what we are about to go over right here, the reversal. Now, in small, I've noted down right there, the reversal is something to remember right there for when we eventually start diving into entries, etc. Because this is going to be essentially the exact same that we are going to dive into later on as well. So it's important to remember. Now, this is the bullish price action that we looked at right there, where we are, again, what are we doing right here? We are respecting those discount rates. We are disrespecting those premium rates right there. That eventually leads us to continue higher right here. Now, eventually, of course, there will be a moment in time where we might create a reversal. So this is where we have that bearish trend right there. So now we have that bullish fair value gap that we are trading back into right there. Again, if we want to remain bullish, we should respect that and should simply continue higher again. Instead, what we see is that we also have that swing high right there that we are trading back into right now. Now we start to actually respect the swing high. We start to trade lower below the discount rates, potentially disrespecting those to instead continue lower again. Now, what we see right here is that we keep trading into even those bullish fair value gaps that we have right there towards the left that we are trading into, and we keep trading below those. So we are respecting, again, more premium rates, and we keep disrespecting the discount rates. This is what eventually leads to a reversal. Now, if we go back a little bit, if this happens and you have the first sign of a potential reversal, that doesn't necessarily tell you a whole lot, because that could, for example, mean that we just create a deeper retracement at this moment in time back into, for example, a higher time frame bullish fair value gap that might be sitting right there or sitting right there, and we respect that and we continue higher again. So if you want to see a reversal, again, important to understand that you should require enough price action. So for example, right here, you want to see, yes, discount rates being disrespected right there. But then after, what you want to see is also new premium rates that we create actually being respected whilst we keep disrespecting the discount rates right there. Once that happens, for example, 2 times, we are respecting a premium rate right here, respecting a premium rate right here, and we are disrespecting this discount rate and this discount rate. And that is going to be quite interesting to actually say, oh, we are reversing at this moment in time, where we can now expect price action to keep continuing lower. Always important to keep track of the time frames, which we are going to dive into in a little bit as well. But for example, what we see right here is we start disrespecting these discount rates right there. Whilst at the same moment in time, well, we're not really respecting premium rates, to be honest, right here, but we might be disrespecting discount rates right there, and you might come to the conclusion, well, this is a potential reversal, so I'm going to look at the bearish fair value gaps right there to continue lower from. You could make the argument we are potentially respecting something premium right here, so you want to look at short instead. You want price to continue lower. Again, if this is on the 1 hour time frame that we are currently looking at, for example, then all this might mean right there is that we are, for example, just creating a simple retracement back into this discount rate on the higher time frame, the daily time frame right here, that we are simply respecting to still continue higher. And we are disrespecting the premium rates still on the daily time frame, where these next premium rates are still going to be the target. So don't get caught off guard by what the lower time frame is doing. Always zoom out a little bit, start on the higher time frame. But this is something that we're going to dive into a little bit later on in this video as well, where this is still interesting to continue higher, targeting the next premium race right there, even though it showed a lower time frame potential reversal. So next, we need to dive into consolidation, how we can identify that objectively. So when we are consolidating, price is not going anywhere. When we are not going anywhere, neither side is getting disrespected. So a premium rate is not getting disrespected, or discount rates are also not getting disrespected. So what that means is that a consolidation is respected premium rates, but at the same time also respected discount rates. So for example, right here, we have a swing high right there and we have a swing low as well. Now, if we trade back into the swing highs, we are respecting the swing highs. We are now trading back into the swing lows. If we disrespect, so we keep trading below those swing lows right there, that's good, because then we could argue that's a bearish trend right there. But now instead what we are seeing is that we are also respecting at the same moment in time, later on, respecting the swing low. Now we continue higher again and we start stalling a little bit. So we don't really do anything at this moment in time. We have a swing low right there and we also have a swing high right there. We also have another swing high right there on top of that. What we see is we trade back into the swing low right here. We respect it. We trade towards the swing highs and we also respect those. So we are essentially respecting premium rates and we are respecting discount rates at the same moment in time. Now, oftentimes you can see consolidations quite simple on the higher time frame. For example, if we move on right here, this is also what oftentimes leads to a consolidation. I'm going to give you some real chart examples as well. Right here, we see very interesting price action because we are trading into that swing high. That swing high is currently what we are arguably rejecting away from. At the same moment in time, we also have this bullish fair value gap right there. This is quite a problem. Well, especially it's a problem if we are now respecting both the swing high and the bullish fair value gap, because that leads to price action like this right here. What is essentially happening right here is a tug of war where neither side is strong enough right here. So in order for price action to move somewhere right there, one of those PD rates needs to be disrespected. Otherwise, if we're both respecting the bearish, the premium rate and the discount rate right there, we're not going anywhere. A very good example of this is most recently on the dollar. This is what we called out in a recent video where we talk about buys is not alone, you also need delivery, because right here, we actually see that we are retracing back into this bullish fair value gap. At the same moment in time, whilst we are retracing back into that bullish fair value gap, we also see that we are retracing back into a bearish fair value gap right there. So at this moment in time, we are respecting both a bullish fair value gap and a bearish fair value gap. That's a problem, because that means we're not going anywhere. We need to disrespect one of those. So either we start continuing lower, reaching, for example, those lows. By the time we reach those lows, we can confidently say we have disrespected the bullish fair value gap. Or we are going to reach those highs and we need to disrespect the bearish premium rate, the bearish fair value gap that we see right there, to then free up to move to continue higher again. That's just your parameters. So that's just waiting in the meantime right here. So if we now continue higher right here, okay, we see that we are disrespecting the bearish fair value gap because we keep reaching above those highs right there. Perfect. So here, now the next target becomes those swing highs, where for a brief moment here, price action is again free to move because we're not respecting both premium rates and discount rates. We've disrespected a premium rate whilst we are respecting a discount rate. For this exact same reason, this is also why, for example, when you're trading from a fair value gap, and we are trading back into that bearish fair value gap right here, whilst we are respecting a discount rate, which oftentimes will be a swing low, for example. So the swing low is the cost that we are trading back into this bearish fair value gap, that premium rate. Then we are respecting the discount rate that we can potentially continue higher from, whilst you are expecting bearish prices from this bearish fair value gap. That doesn't work. So in order for this bearish fair value gap to actually work, to continue lower, we would need to disrespect first the discount rate right there, if that makes sense. So this is oftentimes what leads to this consolidation until we disrespect either premium rate or discount rate. Here we see we disrespect the premium rate right there. That allows us to be free to move right there to actually continue higher towards the next premium rates right there as well. So that's how you recognize consolidations. Now, again, what is important to understand regarding consolidations, how do we get out of one? Because we can recognize it, and once we recognize it, we know, okay, we should ideally stay out. But when do we get involved again? Well, you can get involved again if we get out of the consolidation, and the way we get out of the consolidation is what we just mentioned, is we need to disrespect a side. So for example, if we have this price action of the consolidation right there, if we start reaching below that swing low right there, if we now start trading below that swing low again, and we keep trading below those swing lows right there, and we now respect premium rates and we keep trading below the swing lows, what are we doing? we are disrespecting the discount rates, whilst we are now respecting, again, premium rates. So that's when we go back into that bearish trend, for example. Now, on top of that, there's also something else that I do want to mention regarding consolidations. This example right here that I'm going to show you is not good. So for example, if we have this bullish value gap and we are trying to figure out if we are respecting or disrespecting it. And the first candle is not a rejection away. The second candle is also not really a rejection away. Potentially it is. But then the third and the fourth candle is also not really rejecting away. This is not good, because this essentially tells you that it's taking too long to reject or continue lower. So the strength is broken. So we are not strong enough to continue higher immediately, but at the same time, we're also not weak enough to disrespect the fair value gap and continue lower immediately. This right here is a problem that you should watch out for, because this oftentimes also leads to consolidations. Now, once we understand the trends, we can now move on to the daily buys. And this is where, again, it gets very interesting and where I hope things will start to click as well, if they didn't already click. Because when we understand everything that we just mentioned, then what is the key to daily buys? Well, if we respect the discount array, we move towards a premium array. If we disrespect the discount array, we move towards a discount array. If we respect the premium array, we move towards a discount array. If we disrespect the premium array, we move towards a premium array. Because imagine if you now do this on the monthly time frame, and we are disrespecting a discount array on the monthly time frame, so that means we can move towards the next discount array on the monthly time frame. That is a very large gap on the lower time frame where you understand what the next target is. That's the key to the daily buys. So I'm going to give you an example, but first, again, we need to understand the time frames, of course, because we can't just dive into the chart and immediately go into the 1 minute time frame. No, first of all, again, what we want to do first is mark out the PDAs. And the first time frame that we want to do that on is mark it out on the monthly time frame. If we go into the monthly time frame right here, then we see we have this swing high right there, and we also have this swing low. So these are very close to current price action. You could also, of course, mark out the fair value gap, but that's quite far at this moment in time. It's not super relevant. Again, you don't need to be consistently monitoring the monthly time frame, because most of us are not interested in monthly time frame because we're not position traders or swing traders even. But just understanding once a month where the monthly time frame is at, what it's doing, is very valuable, even if you're a scalper, because that monthly time frame right there eventually leads to the lower time frame either being clean or being very ugly as well. So let's keep it at this swing low and that swing high. Okay, just mark out the PDAs. That's all you need to do right now. Next thing you want to do, so number 2, is mark it out on the weekly. So mark out the PDAs on the weekly time frame. So we're going down one time frame right here into the weekly time frame to now mark it out on the weekly time frame right there. Let me remove or clean up the monthly PDAs a little bit right there. And all I want to do is just mark out, even if they have already been traded above or traded into, I just want to mark them out, the PDAs right there that we have. So we have those swing highs, we have these swing lows right here as well. Those are the most recent from the past few months that we see right here. Then we also have, well, we are in the middle of creating that swing low, but it hasn't been created yet. So we have this swing low right there as well. And we have this swing high. There might be quite a few lines. Now, what I like to do is, for example, if we have this swing high, which is arguably very close at this moment in time to this weekly swing high right there as well, I just remove the highest one right there. Just the closest one is the most relevant at that moment in time. The same right here. We have these swing lows that are very close to each other. Let me just remove the monthly one for now. So we only have the weekly right there. It just cleans up the chart a little bit, if that makes sense. Just easier on the eye. We will remove the old ones in a little bit as well. But first, we need to move on to the daily time frame. So the next step is, again, mark it out on the daily time frame. And afterwards, it's also number 4, mark it out on the 4-hour time frame. So we're going to dive into the daily first, and then we're going to dive into the 4-hour time frame as well. Okay, marking out, again, just the PDAs. We see that we have this swing high right there. We also had a couple of swing lows right here. Same swing lows as the weekly time frame. We see that we have this bearish fair value gap right there. Most recent price action. We also have this swing high right there. We have a couple of swing highs right here actually. And a couple of swing lows right here. Again, a lot of lines, a lot of boxes right here. I'm actually missing right here this fair value gap right there as well. A lot going on. We are going to clear this up and it's going to become a lot more clear. But first, again, now let's dive into the 4-hour time frame. Okay, for the 4-hour time frame, let's just keep it at what's relevant. Okay, we have this bullish fair value gap right there. We have those same swing highs right there. Let's not mark out these swing highs right there. Just keep that for what it is because it basically tells you the same thing. We also have these bearish fair value gap that we saw and a bullish fair value gap right here. If we go to the left, so what we might be aiming for at this moment in time, we have this bearish fair value gap right here. And we also have a couple of swing highs right here. Okay, this is more than enough right now for PD raise. So once we have those PD raise, again, all we focus on right there is just marking them out. But of course, when you start marking them out, well, a story starts to develop. You might have also sat there and, well, I can already see this is getting respected, this is getting disrespected. So a story in itself starts to develop. Again, always remember, right, what we're looking at right here, when we are looking at the chart, our goal is to figure out which PD ray right here are we going to target next? Because price is always moving towards PD ray. Which one is next? That's the goal. So how do we go about that? Okay, let's move on to the next step right here. So what I now want you to focus on is from the PD rays that you've marked out, which ones are we respecting and which ones are we disrespecting? Now, what might help is just having, for example, a Notion next to you or a notebook or whatever helps you to understand what we are looking at. Okay, bias for what is the day is 25th of February. Let's say the 26th right there because we're heading into tomorrow already. The bias for the 26th of February. Okay, perfect. I've marked out the PD raise right there. Now the question is, which ones are we respecting and which ones are we disrespecting? Now we can see that we are respecting a couple of swing lows right here. That's why we are moving higher. We are also respecting a couple of swing highs right there. Okay, so we are respecting both swing highs and swing lows. Well, to me, that's not necessarily that clear because again, we just mentioned that is potentially consolidation. And that's also the main reason why we have been consolidating for such a long time on NASDAQ, on ES, on the indices in general. Okay, but if we go into the lower time frame, if we go into the daily and the 4-hour time frame, I do think it clears up a little bit more. Because here we see we are respecting a couple of swing lows right there as well, the daily time frame. But at the same time, we're also disrespecting bearish value gaps and disrespecting swing highs right there. So the daily is disrespecting swing highs and bearish fair value gaps. So essentially premium arrays. If we go into the 4-hour time frame, you'll see this even more clearly. We are respecting discount arrays while we are disrespecting these swing highs and these bearish fair value gaps that we had right there. And also this bearish fair value gap right there. So the 4-hour is disrespecting premium arrays whilst respecting discount arrays. Just note that for now. We've just noted that right there. Again, for myself, I usually don't make a note like this or anything. For me, it's quite stuck in my brain. But when you're getting the hang of things right here, it might be very helpful to first of all, write this down. All right, so now we can move on to the next step. The next step is form the story, which probably already happened whilst you were marking everything out. But form the story, write it down if it helps, which is also something we are going to do. So for example, we first did this, then this, now I'm expecting this based on that. Now, what is very important to understand, moving already on to the next step as well, when you are forming the story, it's never about, I want this to happen. It's never about, I need this to happen. So you can never fully sit here and say, this is exactly what's going to happen. No, it is all about mark out the next likely possibilities based on respect versus disrespect. So for example, what that means, if we take a look right here at this whole price action. Okay, let's remove a couple of things right now. This swing low, I don't believe is very relevant right here. Neither is this swing low right there. So let's clean it up a little bit. We can also remove one of these swing highs. Now, if we are looking at this, then we see we have been disrespecting premium arrays. That led us to continue higher eventually, because that's what we're seeing right here. We are disrespecting bearish fair value gaps right there, and we are respecting discount arrays. At the same time, we are respecting, sorry for my spelling errors, we are respecting discount arrays right there. That's what we see right here, for example. And we keep trading above these swing highs. So where are we coming from? Well, we are coming from respecting discount arrays right there, whilst we are disrespecting those premium arrays, which we can also see on the daily time frame right here very clearly. So based on that and based on everything that we have gone over so far, if we are respecting discount rates and disrespecting premium rates, then the next step of what I expect is, well, price to continue higher. So I expect price to at least continue higher, but I will also make a plan B in case that doesn't happen. So for example, right here, we are most recently trading into this bearish fair value gap. we understand if we are going to disrespect this bearish fair value gap right there, then what is the next likely move? Disrespecting a premium rate leads to a move towards a next premium rate, those swing highs right there. So the first possibility that I'm going to mark out is disrespecting this bearish fair value gap right there. That will likely lead to a move to the next premium raise right here. And once we reach those premium rates, again, we reevaluate. Of course, that's not the only possibility that could happen. Because let's say we might create a retracement actually back into this discount rate, back into the bullish fair value gap that we have right there. If that happens, perfect, and we respect it, we can still move to the next premium raise that we have right there. That's my second possibility. So the first possibility is disrespecting premium rate to already continue higher right here. Now let me just take an image of that right there to mark it out. That's possibility one. So option one, which is a bullish option. Okay. Next to that, we also have option number two, which is also a bullish option, which is if we do create a retracement back into the discount rate right here, we respect it to still continue higher towards the next premium raise as well. That's my next option, option number two right there. After that, I have bearish options. So that's the plan B essentially. Bearish, option number three right there. Well, we could potentially retrace back into this bullish fair value gap right there. And then what we could potentially do is disrespect it instead to continue lower. If we start disrespecting this bullish fair value gap right there to continue lower, we keep respecting premium raise, which would look something like this right here. Then eventually I would look to, for example, target these bullish fair value gaps right there. I would look to target eventually, potentially the lows right there. This is my next option right here, my option three. Again, it's just a plan B because otherwise what happens if we only stick to option one, for example, we are going to be too focused on that option. So we're going to be, it needs to continue higher right now. And when something else happens other than that you expected, you get thrown off guard, if that makes sense. This is why we mark out the multiple options of what can potentially happen. And that's all a forecast is about. Now, I would argue the highest probability option right now is the first option right there. Okay, and the next likely option is a larger retracement to then still continue higher. I would argue the lowest probability option at this moment in time is actually disrespecting the fair value gap to then continue lower right there. But again, low probability doesn't mean that it won't happen. It could still happen. So I want to be aware of that. Okay, so either way, if we are going to reach these premium rates right there, I want to reevaluate. Because then I'm going to, again, mark out the new options of what might happen again. Because then we might disrespect those premium rates to then continue higher afterwards again. Or we might respect them, disrespect the bullish fair value gap that we create there to then potentially continue lower again. We don't know. Those are all the possibilities of what can happen. But my eyes are currently set on reaching these targets right here. This is what we do with the daily buys. Now, this has now formed our main target or the different options of what we can potentially expect. But again, this is not everything, of course, because this is just the first step. Now we need to move on to number 4, context right there. Context is where we can eventually look for our entry. So the context area is our quote unquote safe zone. The area where we can take our entry. So what is the context area? What is the key to the context area? Oh, you might recognize this already. It's quite familiar. It's of course, it's the same exact thing. We respect the discount rate, we move towards a premium rate. If we disrespect a discount rate right there, we move towards a discount rate. If we respect the premium rate, we move towards a discount rate. If we disrespect a premium rate, we move towards a premium rate. Now, to give you a couple of examples of this, it is quite important to understand the following. Okay, let's take this example of the respect right here. When we trade back into, for example, this bearish fair value gap right here, and we are eventually respecting that bearish fair value gap, which might lead us to believe that we are going to continue lower towards this next discount rate right there. So respecting a premium rate leads to a move towards a next discount rate right there. Then that in itself is a context area right there. So the move towards the next PD rate. So if we respect or disrespect a PD rate, that whatever happens, that sequence, what leads to the next PD rate, that's going to determine our next target. That area right there, that's what we call our context area. Because on the lower time frame, that's where it's very likely to have very clean price action, oftentimes, where you can comfortably take an entry. Now, next to that, we also have disrespect, of course. Now, same scenario right here. But if we now, instead of respecting the fair value gap, we actually start disrespecting it and we target the next swing high right there. then this is the blue area again is going to be our context area right there. That is where we can now go into the lower time frame to look for our entry. So to make this clear, if we use the same examples that we have been going over right here, for example, we are respecting this discount array right there. If we are respecting that discount array, that swing low, then it's very likely the next move is again towards that premium array right there, which is the bearish fair value gap that we saw right there. If we continue higher, then we see right here, we have that swing high. We also at the same moment in time trade into this bearish fair value gap right there. So if we disrespect that bearish fair value gap right there, then the blue area is the context area, because disrespecting premium array leads to a move towards the next premium array. So that area, that's a very high probability area to continue higher at that moment in time. So here, if we now continue higher, keep continuing higher. We have this bullish fair value gap right there as well. We have the swing highs, we have the swing lows right there. So respecting this swing high, respecting a premium array leads to a move towards a discount array again right there. So that in itself is again that context area. We continue lower right here. And this in itself is also a context area. Disrespecting the swing low, disrespecting a discount array leads to a next move like this fair value gap right there on the left to a next discount array. This is where we continue lower right now. Here we have this swing low. If we disrespect that swing low right there, then that leads to a next move towards a next discount array. Disrespecting discount array leads to next move towards a discount array. So for example here, this swing low that we have towards the left, that's the next target. This is the context area then right there. This keeps happening. So if we continue right here, then there's so many context areas. For example, right now, if we respect that swing high right there, then respecting a premium array, we can target a discount array right there. So that in itself is again a context area. So I would like to dive into 2 examples of the trades that I actually took this week that we are in. Now, if we take a look at gold, first of all, we see that we are trading above this swing high right there. We also have this next premium array that could be a potential target right there. Now, what we see, again, this is the whole build up, right? So we see, for example, we start disrespecting premium arrays, we respect discount arrays right there, we keep continuing higher, we disrespect this premium array right there, we disrespect this swing high right there as well, which eventually leads us to move towards the next premium array that we have right there. So then this right here, this gray box, that's the context area. That's where I then look for an entry. Now the same what I did on Nikkei. So on Nikkei right here, we see that we have this bearish fair value gap, that premium array that we have right there. Okay, we see that we actually disrespect the premium array right there. We keep trading above the bearish fair value gap. This gray box again is my context area where I look for a lower time frame entry. And again, this does have a whole build up, right? So first we disrespect premium arrays, then we start respecting discount arrays. We keep disrespecting premium arrays right there. We arrive in this premium array right there, where I now understand my main target is just simply continue higher. So my daily buys is bullish at that moment in time to eventually target those highs. Now I'm framing my context area, and my context area right here is between those PD arrays. So disrespecting the premium array, targeting the next premium array. That's the same, for example, what we just formed on Nasdaq. Now, if this wasn't for the time right here, because currently it's getting quite late throughout the day, which is not my personal preference to still look for an entry, but it's the same thing. We understand, well, our main target that we formed at daily buys was most likely going to be those swing highs right there. Okay, we disrespect this premium array right there. We move towards the next premium array. This right here is a tiny context area where on the lower time frame, you can look for an entry. Again, if it wasn't for the time, if it wasn't so late during the day. Now, of course, you might say, well, these are such tiny moves, right? What is the point of these tiny moves? No one can capitalize on these tiny moves right here. Again, you use the lower time frame within the higher time frame context area to profit from the move. So for example, if you have a 1 hour context area, on the 1 hour, that context area is very small, but on the 1 minute, that's a very large context area. So on the 1 minute, you can profit from it, for example. That's all about how you then go about using the time frames. Now, how do you use the time frames? This is where we move on to number 5, entry. So before we dive into those time frames, first of all, it's important to understand regarding the entries right here. So this is that reversal. Remember when we talked about middle of the video, somewhere there, when we talked about those bullish trends, those bearish trends, and what that means, and how that leads to a reversal, etc., etc. Well, remember the reversal right here, because this is what we talked about. So this is what we've been using for daily buys. This is our daily buys. This is also these are also our context areas, what we've been talking about. But at the same time, this is also our entry. Because what is an entry confirmation? An entry confirmation, again, a lot of people, if you remove the time frame aspect, an entry confirmation, it's just the same as your daily bias, right? The only thing that makes it feel so different is because it's on a different time frame. But if you look at these candles right here and you remove the time frame aspect, this could be the daily time frame, but at the same time, this could be the 1 minute time frame and could be your entry confirmation. It's all the same. And this is what we call fractal nature of the market. Because with your entry, all you're doing is you're also trying to figure out what the next likely move is. So the entry could be your entry bias, because it's the same thing as you're doing on the daily bias. You're just doing it on different time frames. Okay, now how do we actually go about that? So ideally, the entry is ideally 2 time frames below the context area. That's personally what I like. So for example, if you have on Nasdaq right here a 4-hour context area right here, because this is based on the 4-hour PDUAs, then the 15 minute is what I've personally found to be the sweet spot. If you use the 1 hour, for example, 1 hour context areas, you might go into the 5 minute, or you can also actually use the 1 minute right there. If you, for example, use 15-minute context areas. Now, to give you the examples of the trades that I took this past week, if we take a look first of all at Nikkei right here, then we see this gray box again is the context area. If I now go down to time frames right here, then what am I waiting for? Well, all I'm waiting for is for the same thing that we've consistently been doing is, are we respecting discount arrays and are we disrespecting premium arrays right there? So for example, right here, once I see that sign that we are strong right there, we are disrespecting those premium arrays that we have right there, respecting the discount arrays. Then once I enter, I cover usually the lows. Now here it's 50% of the wick because the low, it's quite far. So 50% of the wick, I'm perfectly fine with that. Then here, the thought process is that this might turn into a fair value gap. So if it turns into a fair value gap, we can still retrace back into that to then continue higher from it. So that's the thought process behind it. I'm entering on a future fair value gap, if that makes sense. So the same right here with gold. This right here is again that context area. If I now go into the lower time frame, 2 time frames below, that's my personal preference, onto the 15 minute right here. Initially, we started respecting these discount arrays and disrespecting these premium arrays right there within our context area. Okay, so this was initially my trade right there that actually ended up being a loss right there. Now, after we actually started disrespecting still these premium arrays and we started respecting still the discount arrays that we had to reject away from them and continue higher. So here, this right here, that was my entry afterwards right there to then target a 1 to 2R with my main target being right there, which is again the 4-hour fair value gap that we talked about right there. So what you're doing with that entry, you're waiting for the context area to be met. Once we reach that context area, you want to do the same thing. So are we respecting discount arrays? Are we disrespecting premium arrays? If you're taking a buy, of course. Now, if we move on right here, then the order is again the following. So we have that daily bias. That daily bias, the purpose of the daily bias is to create that main target. So what are we likely moving towards next, if that makes sense? Then once we have that, we move on to the context area. So this creates our context area to look for an entry right there. After the context area, we move on to find our entry 2 time frames below, ideally. And you can play around a little bit with that as well. But again, pay attention to, are we respecting discount rates if you're looking for a buy and disrespecting those premium rates within the context area? That's what you want to look at. For a sell, for a bearish context area, you would then look for disrespecting discount arrays and respecting those premium arrays. Now, right here, then afterwards, we move on to risk management. So that's also what we need to understand next, when to go break even. Risk management right there. So again, I want to mainly dive into when to go break even. You go break even when there's no reason to return. Now, of course, that's a little bit vague, so we're going to break that down. Often, that is after a retracement back into your entry area. So what that means is, for example, right here, if you have this bullish fair value gap right there. Now, let's say we are continuing higher right here and you take the entry around that area right there because you see we are disrespecting those premium rates and we are respecting discount rates. So that's where you take the entry. Then initially you might cover, again, like I do, for example, that future fair value gap, because again, this eventually turns into a fair value gap, right? Ideally. So you might cover that with your stop loss in the case we do create a retracement. Now, if we now continue higher and we do actually create that bullish fair value gap and we retrace back into that bullish fair value gap right here. This is all right. No need to panic right here because this is very natural. We can still continue higher. And in an ideal scenario, we should also continue higher because now we can make the argument we've had a retracement back into the bullish fair value gap, back into the order block. So now we should continue higher because we are respecting it. We should be rejecting away. Now, why is that? Because if we are now going to create a further retracement, a further bearish retracement, why would we do that? Because the only reason why we might be doing that is because we are actually disrespecting the order block, disrespecting the bullish value gap to instead continue lower. So our stop loss right now can be moved to this right there, to our entry. This is where we now go break even. Because the only reason as to why we might now create a further retracement is to fully disrespect the bullish value gap, fully disrespect the order block right there, to then continue lower and actually target the next discount rate that we have right there. So when that happens, there is no reason for price to return anymore. So we can go break even at that moment in time. If you would like to have these PowerPoint slides as a PDF, you can sign up for the newsletter and I will send you the PDF right there. All right, perfect. Thank you.